There's one theory out there, though, that the stock market may have the answers. Politico, will pop up that article, says that the S&P 500 has this strong track record of predicting whether the incumbent party returns to the White House. All right, with that, Doug Flynn is here from Flynnzito. Thank you, Doug. We'll put the chart up of the S&P 500 that has performed well, by the way, under the last couple of presidents, including this one. So I suppose it's weird, though, because Kamala Harris is not really an incumbent, but she is sort of, because she's the vice president. So I don't know if this will apply to her and put her back in the White House, or we should just ignore it altogether. Tell us.
Well, yeah, this is saying that if the stock market is up in, like the market's been up about 10% since August.
Yeah.
If the market's up, the incumbent or their party wins the election. And if it's down, then the incumbent loses. And so that's been right 20 of the last 24 times. And so that math is about 83%. What's really interesting to me about it is it correctly predicted 2016 in Trump, but it was wrong in 2020 in predicting Trump would win again. So it's 50-50 in the last two, but if you stretch it out, it's about 83%. And while that's good, the betting markets are about 73%. There's a lot of these things that we do in the markets, and we could do them around, like there's the Super Bowl indicator, which is like 68% accurate. So there's all these things, but they somewhere always line up in the 80% range if you're lucky. But that always makes me think, you know, if I had an 83% probability that my plane was going to land, would I get on it?
Yeah, not great if it was 17%. Yeah, I'm not getting it. If a plane has a 17% chance of not landing, there is no chance I'm getting on it. It better be .000, be like the voter fraud thing that we showed before, percent.
That's right.
Not even close. You know, the betting markets, by the way, there's been a lot said about those. Wall Street people are overly obsessed with that, by the way. They look at those all the time for whatever reason, because I think they like the ideas of these probabilities. Like, you know, markets can be manipulated. And in this case, I think they are, some of them, by what they call like a big whale, right? Is that the word they use? Like, so somebody comes in with a bunch of money and they can throw you off one way or the other. So I say be careful with that kind of stuff is my point.
Yes, I would be careful. It's interesting, you know, the betting markets have been around before we had internet betting, but there's been betting markets 1884 to 1940 in those 15 elections. You can see that the betting markets actually predicted about 11 times. But they're wrong as well. And there are times when they've tried to influence it during that period too. But the funny thing about betting markets is there's somebody on the other side oftentimes which will kind of counter that.
Yes.
But it can be. So it's, look, you got an indicator on one side saying Trump, you got an indicator on the other side saying Harris. So here we are back within the margin of error again.
Which we have no clue, which is really the point. We really don't know. And people say, well, who's going to win? We really don't know. And anybody who does is just doing what we're doing right now, filling time until the election by talking about betting markets and stock market indicators. How about real data? We did get some of that today on inflation. That's one of the biggest issues, if not the biggest individual issue in this campaign. People say the economy, they're worried about inflation. They still are, but the Fed uses this gauge, their favorite gauge. They want 2% inflation. We basically have that now, right? 2.1.
They've got it.
But people don't feel it yet, right? I mean, it's a strange phenomenon. Explain.
Yeah, I mean, look, the inflation, they essentially have hit their target. This is their favorite indicator, you know, not including food and energy, which are you know, sort of more volatile. But their favorite indicator is right there. This kind of ties into whether or not they're going to lower interest rates, and if so, by how much. But, you know, it's really a factor of three things. You got the labor market here, you've got inflation, and you've got economic growth, that's GDP, you know, and that sort of growth rate is slowing, but it's there. And so that's kind of the three things we're looking at. But this is exactly what you want in terms of inflation to be where it is. And it's right where it was sort of before the big spike that we had a couple of years ago. So I think that this is clearly a great number, and you want it to continue because things can kind of normalize. There are still things that are way overpriced, but the disinflation, the rate of inflation continues to slow, so the price increases will not be as much as they've been, and then people can kind of catch up, and that's what you're hoping for.
All right, Doug, as always, thank you. Doug Flynn explains all these financial matters about as well as anybody does, joining us here on NewsNation Now.